We had a fascinating evening in American politics last night. We witnessed what I believe is a great comeback story for former President Donald Trump. It appears that he has won the Electoral College decisively. It appears he's won the popular vote. It appears the Senate has gone Republican. I don't believe the House is called yet, but it looks like that may also go Republican.
The House is still to be determined. I've got friends saying that the Democrats are going to win the House. I've got friends saying the Republicans are going to win the House. It's going to be very close. Decision Desk HQ put out their preview, if you will, and they have the GOP winning the House 218 to 217. Remember, 218 is what you need to have control of the House. So if it's down to one person, you're essentially looking at one heart attack away from the House flipping. And for just one reference, if you call it fun, generally 2 to 3 members of the House die every 2-year section. So just call it what you will. But
well, you didn't have to get morbid like that.
But my point here is that generally you see about 7 to 10 members of the House resign and or leave or die. Sorry, I hadn't had my coffee yet. Now, this is where the Inflation Reduction Act comes in, because the Inflation Reduction Act, around $500 billion in tax incentives and so forth. So it's not going to get you to the promised land of paying for those $3.5–4 trillion in tax cuts. But there's going to be a lot of questions asked about, can the IRA be tweaked or repealed to help pay for these tax cuts? Now, our base scenario, and this is what we had put out prior to the election, and it hasn't changed as of this morning, is that for the most part, the Inflation Reduction Act should be cemented and or safe.
Because LNG is one of the topics, right, where this election really could have an actual relatively immediate impact.
Right now, crude oil and energy is pretty stable, but it's the most sold out commodity on the planet. I mean, they were net short for the first time ever just a few months ago. So we've had the bounce.
I'm a hugger, and I hug the 50-yard line of politics all throughout my voting lifetime. And so I come at this as an independent of all independents. And quite frankly, if you look at the data, if you look at the stats, energy does better during a Democratic administration.
No disagreement from me there, Vince. And we've worked together for over 10 years. I've never received a hug from you. Good morning, good afternoon, everyone. This is Rob Barnett, and I'd like to welcome you to today's BI Energy Exchange, where we talk about our research and the latest developments in energy markets. This morning, we've got a special guest for today's call, Nathan Dean, BI's senior analyst covering policy and legal matters, joining us live from Washington, D.C. Also on the call, we've got a number of regulars who probably know. So we've got Vince Piazza joining from Wilmington. We've got Talon Custer joining from our offices in Princeton. And Mike McGlone is based in sunny Miami. He had to just hop off to go do a TV hit, but he's going to try to come back on here in just a second. So just a quick reminder, we hold these calls every Wednesday at 10 a.m. New York, 3 p.m. London, whether there's an election or not. So for all of our regulars, welcome. We love you. And for anyone who's discovered this call, perhaps because we advertised that we were going to be talking about the election outcome, welcome. Join us again next week if you find it useful. Feel free to type questions into the chat for myself or anyone on the call. We'll try to get to them with the time we've got allotted. So, okay, Nathan, we had a fascinating evening in American politics last night. We witnessed what I believe is a great comeback story for former President Donald Trump. It appears that he has won the Electoral College decisively. It appears he's won the popular vote. It appears the Senate has gone Republican. I don't believe the House is called yet, but it looks like that may also go Republican. So with that in mind, I would love to get your framing of the results. What do you think they mean? Is there a mandate? And does that mandate going to translate into anything real as far as the energy world should be concerned?
Yeah, so obviously President Trump believes he has a mandate. I mean, he said that in his speech as I watched it around 2:30 this morning. But that mandate, he certainly has it, and he's certainly going to use it. So what does that mean for us who work in the investor market space? Well, let me first start with the Senate and then the House, and then once you get an idea of how all of this works together, let me go through some of the key themes and how next year could play out. So obviously, President Trump has won the White House. He'll be the president on January 20th. The Senate, as of right now, the GOP has 52, so they're going to control the Senate. Still a couple of races out there. If you look at Michigan and Wisconsin, they're flipping right now. They're actually the vote totals. They're within 9,000 votes in Michigan, and it looks like 32,000 in Wisconsin. Jackie Rosen in Nevada. Anyway, where I'm going with this is that Republicans are going to have the Senate somewhere between 52 and 56 seats. Now, why do we care? Well, because President Trump's in the White House and the Republicans are going to have not just a 1 or 2 person majority, but a 3 to 4 or 5 person majority in the Senate. President Trump is going to be able to replace the Biden era regulatory leadership and move along and put his own people in place in a much faster perspective than if Kamala Harris won, or if the Democrats had kept the Senate, or if the Republicans controlled it 50-50. So from the regulatory standpoint, leadership is going to change. Expect that to take somewhere between 1 to 7 to 9 months next year in 2025. It really just depends on the agency and depends on how much President Trump cares about that agency. A lot of times these nominees for like FERC and EPA, for example, they come from the Senate. So they're already talking about who's going to be in who and what position and so forth. So look for that to come in next year. The House is still to be determined. I've got friends saying that the Democrats are going to win the House. I've got friends saying the Republicans are going to win the House. It's going to be very close. Decision Desk HQ put out their preview, if you will, and they have the GOP winning the House 218 to 217. Remember, 218 is what you need to have control of the House. So if it's down to one person, you're essentially looking at one heart attack away from the House flipping. And for just one reference, if you call it fun, generally 2 to 3 members of the House die every 2-year section. So just call it what you will. But
you didn't have to get morbid like that.
But my point here is that generally you see about 7 to 10 members of the House resign and or leave or die. Sorry, I hadn't had my coffee yet. But the reason why we care about the House in the energy sector is tax reform. Remember, at the end of 2025, the Trump era tax cuts expire. And because if the Republicans take the House, the Senate, and the presidency, and they've already taken the Senate and the presidency, they can use reconciliation to bypass Democratic opposition and put in something that's multi-trillion-dollar package. Think of very similar to what President Trump did back in 2017. Now, these Trump-era tax cuts, they're expensive. Just the individual portion that expires is roughly around $3.5 to $4 trillion. If you were to take the entire Trump tax cut from 2017, you're looking at somewhere around $6 trillion. And if you're going to use reconciliation, it has to be budgetary neutral. Now, look, you can say economic growth is going to pay for it. You can say tariffs are going to pay for it, and so forth. But you still have to figure out how to be budgetary neutral. Now, this is where the Inflation Reduction Act comes in, because the Inflation Reduction Act, around $500 billion in tax incentives and so forth. So it's not going to get you to the promised land of paying for those $3.5–4 trillion in tax cuts. But there's going to be a lot of questions asked about, can the IRA be tweaked or repealed to help pay for these tax cuts? Now, our base scenario, and this is what we had put out prior to the election, and it hasn't changed as of this morning, is that for the most part, the Inflation Reduction Act should be cemented and or safe. We've seen a lot of CapEx going into Rob's, companies and so forth like that, a lot of CapEx going into southern GOP states, and we've even seen letters from district members, people in the House, state lawmakers, sending letters back to Washington and saying, please don't touch this because I got a plant that's being built in Georgia and I don't want that disrupted. So because the CapEx is coming into the United States, I think the IRA for the most part should be safe. Now, there's a big caveat here, is because there's 2 ways the IRA can be amended. The first is legislation. As part of this reconciliation process, as part of this tax reform deal, the IRA could be tweaked. Something like the electric vehicle tax credit, I think potentially could go away. I know it's not renewables, but it's Tesla. That $7,500 tax credit, they may do away with that just to help pay for tax reform. But the second thing, just remember, is that Treasury does have the ability to change the parameters of the tax incentive, because the way these regulations come out, and I know I'm going fast, but these regulations come out via something called the Administrative Procedure Act. So you propose a regulation, you have a comment period, you finalize it, and then goes into fruition. And this is what the Treasury Department did with the IRS for a lot of these tax incentives, is they proposed it, they finalized it, and they went into fruition. President Trump could direct the next Treasury Secretary to say, look, go back to this tax credit, and rather than applying it to a broad swatch of the industry, apply it to this much. And you could change the parameters of the tax credit. Democrats can't touch this. And so don't be surprised if that happens as well. We just don't know the specifics. That's where the difficulty comes in there. So what we try and advise to our clients is start with a variety of different scenarios. And as we get more information and more time and so forth like that, the scenarios actually get more narrow and narrower. And so we should be able to give you a good picture. So that's really, just how all that comes together. The last thing I would give you is, if you think about 2025 and you think about how President Trump's going to operate, the first thing is executive orders. President Trump was third in terms of the last 50 years in terms of executive orders, behind President Carter and President Nixon's first term. Now, a lot of executive orders are symbolic in nature. It's a fancy way of President Trump picking up the phone and saying, do something either the legislative route or the regulatory route. But the power of the presidency is a lot more powerful when it comes to things like trade, national securities, and tariffs. And so when President Trump says that tariff is his favorite word in his dictionary, as he told our editor-in-chief, John Micklethwaite, there's a real risk/opportunity there when it comes to tariffs because it's within his power. But also remember that tariffs are negotiation tools for presidents, and no president wants to give themselves the restriction of immediately jumping into a tariff. So if you see a red line come across the Bloomberg terminal next year, right after January 20th, about a tariff, more likely than not, in that language, it will say, I'm going to direct Treasury or Commerce Department to enter into a tariff in 270 days or in 365 days, unless something happens. Because for President Trump, it's a negotiation tool. So you'll have a little bit of headline risk, and then the tariff would come much later. Other things to keep in mind, the first 100 days of the presidency is very important from a political capital standpoint. So, and this is probably going to come from the House, but they got to figure out what their landmark piece of legislation that they want to work on in Congress. I don't think it's going to be tax reform. I think they're going to push that towards the latter half of the year because if they have reconciliation, they certainly don't have to use the political capital, but I could be wrong. We'll find out in the next few weeks as Congress comes back. That's the first 100 days. The deregulatory stuff, I talked about that previously. Look for around 6 to 9 months for those leadership to take place. And then once the new leadership is in place, they have to follow the Administrative Procedures Act to do a deregulatory effort, which could take up to 2 years. So 2025, 2026, 2027. And then finally, that tax reform, that IRA debate will happen at the tail end of 2025 because that January, the January expiration. Last thing I'll state is I know that we have a lot of energy fans on this call, but if you are worried about the debt ceiling, the risk of a debt ceiling issue has gone down dramatically because we never really saw it in the President Trump's first administration. And, we don't think, even if the Democrats take the House, we don't think they're going to try and use the debt ceiling as leverage to try and score political points. So, Rob, with that, I apologize for taking up 13 minutes, but thank you very much for allowing me to come chat.
That's all good. I think folks really want to hear some of your perspective. Let me ask just a quick follow-up question before we bring in some of the other folks from the team. I'm just looking at my screen right now. The median solar stock is down about 10% today. Median wind stock's down about 5%. Vestas, world's largest wind turbine manufacturer, down 11% right now. First Solar, the largest U.S. solar module maker, down 17% and change here at the moment. So the market seems to have taken a pretty negative reaction on some of these clean energy names. And so let me just explore a little bit more deeply on the IRA. And so it sounded like you were sort of saying, well, if the IRA is going to be tinkered with, it's probably the second half of 2025. And so sort of mentally, if these companies have tax credits that they can claim that are IRA provisions, are they probably safe for the duration of 2025? possibly even 2026. What's the timing look like, even if there are changes? And also just address, because I think you said it, but full repeal, not super likely, more like a tinkering. Is that right?
Yeah, because the primary focus of, look, you could do a full repeal via reconciliation for tax reform. You could do it, but it would be messy, and you're going to get into district versus district fights, meaning that somebody in New York would want this to go away in its entirety, and somebody in Georgia wouldn't because they've got a plan coming in. And just for the sake of keeping it easy, for the sake of making it more clean and so forth like that, I don't think that there would just put in language to full repeal. But really, in terms of the timing for what it is worth, the 2025 tax credit should be safe. I think this is going to come at the tail end of 2025, and then it would be implemented. Remember, because if they say that this tax credit is going to change, then they have to go through the rulemaking process again to change it. Or, if they say it's gone in its entirety, then Treasury just has to put out a notice saying it's gone. But I don't think that's going to really happen for the bulk of 2025. The one caveat that I would throw out here is that nobody in Washington prior to the election knows how to pay for those tax cuts. Everybody says they don't want it coming. And if you live in New York and New Jersey, your SALT deduction tax cut is part of this. Nobody knows how they're going to try and pay for this. The Republicans had discussions prior over in the House. Just remember, the House Ways and Means Committee tax policy normally starts in the House. So the chairman or the chairwoman of the House and Ways and Means Committee is just as an important enough a voice, which is why we care about who controls the House. But, if the Democrats control the House, Trump is going to have to negotiate. If the Republicans control the House, they still got to figure out a way to pay for it. And so these discussions are going on right now, but there's not a lot of specifics out there. If those specifics, if they decide that they just want to use the first 100 days to go after tax reform, that process could be sped up. But again, I think that 2025 tax incentive is probably safe.
Okay. I'm going to come back to you. I'm going to give you a question that you can think about, but I'm curious about the CHIPS Act. I know this is an energy focused call, but we'll come back to you. Talon, I want to come over to you quickly. So you look after the LNG space, among other things, for BI. I'm just looking. It looks like I'm just picking on Cheniere as a bellwether. They're up about 2%. We've talked about this idea of the pause in LNG permitting that was implemented here under the Biden administration. How do you interpret a pretty strong sweep for the Republicans? Does it portend much for the LNG names and some of the focus area you've got?
Yeah, I mean, it's definitely a positive because LNG is one of the topics, right, where this election really could have an actual relatively immediate impact. So, his first week in office, I expect that moratorium to be lifted, but, similar to what Nathan was saying, probably not going to have, results for months in terms of, projects moving forward or export authorizations. But we do expect some final investment decisions next year, and some of the beneficiaries are, Cheniere, Sempra, and NextDecade is a company that I would point you to because permitting is where this comes up with energy infrastructure. And Rio Grande, Texas LNG, regional energy access. What does Trump and his administration do with these projects to help clear up the permitting process? So obviously that's going to take months, even years. But I think he's going to attack that. But LNG, we expect to see some results next year.
Okay, great. Let's swing over to Mike McGlone. Mike, I hope your TV hit went well. Glad you were able to jump back on the call. Just looking at the commodity landscape generally, it looks like Brent crude hanging out in the mid $75 a barrel range. Natural gas here in the U.S. $2.70 Henry Hub. So you've had a strong call on the commodity landscape for some time. Give us an update. What's going on in commodity land? Does the election results one way or the other really feed into this sort of global thinking on this? How do you read the tea leaves?
Well, the macro is as of now, as the new President Trump is, I think it accelerates the normal propensity for commodities to get cheap after getting too expensive. So we'll start with crude oil. What's significant now, though, is the main commodities that were kind of overweight and long from a future speculator standpoint are getting hit the most: copper and gold. Copper is probably going to follow crude oil lower, in my view, but gold, I think, is more of an enduring bull market. It was way overdue for a bit of a correction, a bull market correction, a little profit taking, but right now, crude oil and energy is pretty stable, but it's the most sold out commodity on the planet. I mean, they were net short for the first time ever just a few months ago. So we've had the bounce. I looked at Brent crude 80 as the line in the sand, and to me, it's just a matter of time. We have to get the WTI crude oil, don't have to, but should, below its U.S. break-even cost around $56 a barrel to really offset the excesses of supply versus demand. Let's look at, we have diesel demand in the U.S., Europe, China, and just the latest data from India, all going down. Yet we have pretty extreme increases of supply, most notably from U.S. excess supply out of OPEC. You see what's happening in a normal situation, but at the same time, we have that paradigm shift with rapidly advancing technology, hurting both sides of that scale, creating more supply and reducing demand. So I look at it as just a matter of time. Crude oil does what it has been since 2008. It has to get below 40. It's completely dependent now on a strong stock market. It needs China demand to pick up, maybe from some stimulus, and needs OPEC to cut back more supply. Otherwise, it's going to do what it normally does. And the question is, what stops that? Now, we've already seen it happen in natural gas. I'm glad you mentioned that. The low this year was 150. It was well below the $2 cost of production. Vince can speak more on that. He's been all over that. Now we're bouncing back up. It's a winter season, and it's probably going to put in a peak soon. The question is it 3 or is it 4? And then you look at the grains, the most elastic sector. They are just way oversupplied. I mean, we've had great prices. It brought in more supply. Soybeans, corn, wheat, there's just too much of it. Unless you get bad weather, you're supposed to get below the U.S. cost of production, which in corn is around $3.75, which right now is $4. But overall, increasing tariffs from the U.S. on its major, the 100 or so countries in the world who export to the U.S., most notably China and Europe, is bad for all commodities. And I'll end with this. To me, the key one is copper. Copper is the one I've been waiting to break down. I think copper could not get above $10,000 a ton, except for a short period of time. It's one of the most auto-correlated commodities. And if it does what I think it's going to do, just that normally does, get back down around 7,000. That's the whole scale tilting lower. And I'm still quite bullish gold, but right now I just need a bit of a backup.
Thank you, Mike. Okay, Vince, let's hear from you. I'm just looking at my screen. XLE up about 3% here today. If you don't know XLE, it's a fund that's got a bunch of US E&Ps in it. So Vince, a lot of your coverage sits in that. Give us your read. What does the election mean much for the US E&P space? And I would just caveat that before the election, we had done a survey with many of you listening, Bloomberg clients, and asked, would Trump or Harris have a meaningful impact on oil prices? And if I recall the results, I want to say that the thinking was that Trump would actually be more bearish for oil prices, a little bit of a contrarian take. But anyway, over to you, Vince. Break it down for us. How do you read the results?
I'm a hugger, and I hug the 50-yard line of politics all throughout my voting lifetime. And so I come at this as an independent of all independents. And quite frankly, if you look at the data, if you look at the stats, energy does better during a Democratic administration. But it does really well when there is divided government as a check and balance. And I think that is what is significant. When Obama became president, many of the pundits suggested this was going to be the death knell of the energy industry. Well, in fact, we got two very significant things. We got a high in oil production, a high in natural gas production, and we also got exports of oil through both houses, right? And so, I would tell people who are sitting here drinking their coffee in the morning, wondering and pondering, it's not going to be as bad and it's not going to be as great. So I would just tell everybody, relax. You know what really does good for energy and energy investors, energy consumers? Innovation and technological development. No political party can retard that development. And we saw that in Texas when the shale revolution started and how that was exported throughout. And I think that is very significant. So while there is one side of the house that is very depressed today, I will tell you that more likely than not, we're not going to have this great burst of output because the investor is telling these companies, hey, I want the excess cash in my pocket. Don't produce as much. So I happen to have a very different view. I'd like to think of it as a very independent view. And I agree with you. It may be a contrarian point of view, but I don't think things are that great. I don't think things are that bad. The industry is consolidating. That's a good thing. And we need to move forward from this period of bashing the industry and understand that we're going to have natural gas and oil around for a very long time as well.
No disagreement from me there, Vince. And we've worked together for over 10 years. I've never received a hug from you, but I look forward to that. Speaking of hugs, if just quick advertisement, if you want to meet any of us in person, we do have regular events. Let's see, we've got Madrid coming up on November 21st. We've got London on November 22nd. Nathan's got a series of events over in Europe next week because I know he's on some kind of grand tour. We won't give you all the details, but if you're in Europe and you're in a tier 1 city, Nathan's probably coming through it. And we will have events in New York coming up soon as well, and Houston. But those are on the near-term calendar. Vince, you got an event?
If anyone is in Pittsburgh tomorrow and Thursday, I'm going to be at the Doug Energy at the Lawrence Convention Center. Give me a shout, and I'd love to catch up with you all.
I love how small this world is. I bet some of the folks on the call are going to be there. So yes. So not to distract from the topic at hand. So Nathan, I want to come back around to you because we have been getting some questions. I want to ask you them, but first, let me come around to the CHIPS Act a little bit, because I think the CHIPS Act maybe could be considered alongside the IRA, and sort of I've heard that CHIPS Act is one of these pieces of legislation that maybe is potentially could get a vote up or down for repeal, and I don't know the politics of it, but it seems to maybe have a similar analog to IRA. It's in place. Companies have already started deploying capital. We're making microchips in America again, and so help us understand. Is CHIPS Act one of these things that potentially goes up for a vote? And if it does, why wouldn't IRA get the same up-down kind of vote?
Yeah, so I think broadly the CHIPS Act is safe, much safer than the IRA, because the CHIPS Act did not go through reconciliation and went through normal order. And so, that's where the filibuster comes into play. And so the CHIPS Act, I just pulled up, I couldn't remember the vote, but in the Senate, it was 64-33. And it was bipartisan both in the House and in the Senate. Now, if I wanted to repeal the CHIPS Act, I got to go back through regular order, which means when a Democrat stands up and says, I'm going to filibuster this thing, now I need 60 votes to overcome that filibuster. So even if all 56 Republican senators, assuming that they have 56, and I don't think they would, considering a good number of them voted for the bill in the first place, it's just, when you have to go through those procedural hurdles, it's much more difficult, combined with the fact that I'm not exactly sure that the Republicans in the Senate want to use the floor time. Now, the big concern with the CHIPS Act, if you are looking at it, is any type of unused funds. So if you go back to the COVID relief days, there was approximately $300 billion from those COVID stimulus bills that were never touched. And anytime Congress doesn't, when they dole these monies out to the agencies, the monies go out to the agencies, but it's not like the agencies immediately send that money out. It sits in a coffer, it sits in a program, and if those monies if they're stuck and they don't move, Congress always has the ability to claw it back. Now, I will say that I have not looked at the CHIPS Act implementation, so I don't know how much unused funds are. I know that there's some out there, but I don't know if it's a lot or a little. But if there are unused funds out there, Congress always reserves the right to claw it back because it's an easy way to pay for something.
Very interesting. Okay, so another question for you, Nathan, and I apologize because I've got like a bunch of IBs from folks listening and also here in the Zoom chat. So we're going to try to get to some of these questions, but one of them, and I think you've already sort of implied this, Nathan, but I don't think we use this specific terminology. So within the IRA, there's a provision called the 45X tax credit, and it's basically the provision that helps to subsidize companies like First Solar and others out there who have scaled up and are doing clean energy manufacturing in the U.S. And the question, I've got it from several folks, worded a little bit differently, but if they would love to hear some commentary specifically on that, Nathan. So I suspect, given you already said this idea about the governors and some of the local House members and others sort of quietly supporting that the IRA, I think that's the piece they're probably supporting the most. But you tell me, do you have any sense specifically on 45X?
Yeah, so what I did, sorry, full disclosure, I have not written on this, so I can only talk about high-level thoughts. I can't talk about the specifics of 45X. But what I can tell you is that there was a bill that essentially sought to repeal it. And, in pulling up that legislation, I'm not seeing the amount of co-sponsors or anything like that would signify that this is a massive effort. So just keep that in mind. I apologize, I can't go any more just because I haven't looked at it. But just using publicly available data that anybody can look up, that's just my 2 cents.
Did you do that on the terminal, or did you use a external website?
I'm going to plead the fifth on that one.
Okay, I think there's a way to do it on the terminal. Also, you can look it up on.
You use our friends at BGov. You go to BGov
Yeah.
Go, and you can use that, but that would require me to log in, and again, I plead the fifth.
Okay, great. Okay, so we've got a lot of questions about tariffs, and so let's explore the idea of tariffs across the topic space here. So, Talon, I want to come back to you. Generally, the U.S. has become a dominant force in the global LNG market. I believe we're the world's largest LNG exporter right now at the moment. I know we're neck and neck with a couple of other entities out there, but give us a sense. Are you worried that if the U.S. starts using tariffs, that other countries would impose tariffs and potentially affect the LNG export narrative that's been so strong out of the U.S. here over the last few years?
Yeah, retaliatory tariffs are a threat. I mean, China takes the cake here, right? Especially if it does go up to 60%. But China takes about 5% of US LNG, and a lot of it is, by contract. So what would happen if they don't take the LNG, they don't want to pay the tariff, they would take it and re-export it. I think there's room for that LNG to go elsewhere. So I still think, tariffs are possibly a negative for US LNG, but overall, the administration would be a net positive because of the Biden moratorium and more projects moving forward. So yeah, certainly a threat, but I think, there's enough demand for it to go elsewhere, especially if prices were to come down.
Okay, Mike, let's swing around to you. Tariffs, I think you've got a great call on commodities generally, but I don't often think about how tariffs feed into some of your macro views on the market. Do you see tariffs as a potential catalyst to affect your view on sort of where commodities go generally?
Oh, absolutely. I'm glad you went there. First of all, they're pre-existing trends. It's gold outperforming most commodities. Commodities already heading towards lower price cures, with the exception of some industrial metals, which are tilting there now because of tariffs. Now that's the more the demand side, because what tariffs will do from the demand pool parts of the world, i.e. China. It's the U.S. is the world's a net exporter, we mentioned, of LNG, but 6 million barrels a day net exporter of liquid fuels, crude oil with Canada. That's a significant dependent on exports to keep prices elevated. And if there's trade tensions because of tariffs, that's a pressure factor, most notably for crude oil and grains. The U.S. is one of the largest exporters of grains on the planet. We export well over 50% of our wheat, about 50% of soybeans, about 30% of corn. So if there's more trade tensions because of the tariffs, counter tariffs, that's a pressure factor and the absolute need for the U.S. to export these contracts to keep prices elevated. And never forget that crude oil, first, all the grains are priced and delivered, and the futures are priced and delivered in the U.S. And WTI crude oil trades in the U.S. So these are significant pressure factors for an exporter, net export, massive net export, increasing exporter of these commodities. And that's where I look at it. It's all bad. The question is, maybe, hopefully Nathan's right. A lot of it's just, testing the trial balloons. But overall, it's in the bottom line is they're already pre-existing trends. It's just accelerating those trends. What stops it? So and like the key thing this morning is soybeans are bouncing a little bit, but they were so oversold. But then we have to look at the supply out of the U.S. Now, out of South America. I'll end with this. The U.S. used to be the largest exporter, net producer of soybeans. Now it's Brazil and South America, because prices are high. They're able to bring on more. That's overall pressure factor for prices.
Okay, thanks, Mike. Vince, I'm curious if you've got a view on tariffs. And there's another question that I think I'm going to toss to you, because I think you probably most likely of the group to maybe have some perspective on it. But a couple different questions coming about Iran. And, maybe you don't have a crystal ball of how Trump is going to approach Iran, but if you could talk about kind of how they fit into the sort of global oil market dynamic, I think that would be useful.
Yeah, sure. Look, they are a major player in Middle Eastern oil. There were sanctions against them prior, and we all know how the world operated during that period. Here's the thing: we are incentivized by price, and Mike will tell you, high price, we bring more output on. Low price, we shut output. Right now, the investment community is telling the operators of this rather mature industry to hold off bringing barrels to market. And we want the excess cash, not the output. This industry is roughly 3.4% of the S&P 500. It has been in this low level for several years. It is well off of the high of the commodity super cycle when it was in the low to mid teens. We're not going back to that point, because there is no true demand power driving the need for these barrels. OPEC will likely continue on their path of managing the barrels that come onto the market. U.S. operators, not any one particular operator, but the operators in the U.S. who are now larger this cycle than they were last cycle because of all the M&A, are better apt to manage the deployment of rigs and frac crews and extracting molecules this time around. So I don't really see the volatility that we saw in prior years. I don't really see this massive pop or massive decline that we saw in prior years. There is such a thing as the oil vol, and it's not likely to move as significantly as it did in prior years. What is significant is the amount of free cash flow that these companies are producing. And we've just gone through the bulk of our earnings season. And what is consistent is output growth will be moderated again in 2025. And we will be working toward an industry that sees free cash flow and free cash flow yield as a primary barometer of success and how they implement their cash distribution strategy over the course of the next year plus.
Okay, thank you, Vince. Nathan, I want to get some perspective from you, perhaps. And we're clearly running over. We're going to take a little bit more time, but number of questions I've been sent on Iran, and I think Vince just kind of framed how they play into the oil market. But a little bit of backstory, right, is that under the Obama administration, there was an agreement in place for Iran related to its nuclear program. And that agreement essentially allowed Iran to produce more oil. It went away under the first Trump administration. And so now I think the question, and it's sort of been in this sort of limbo phase, right? I think, and so I think the question would just be, do you think that President Trump will, work with State Department and so on to find some type of new way of thinking about Iran? What is this an important topic for the administration or Congress? Is there going to be pressure to sort this out?
Yeah, it's funny. I was actually listening to a couple of radio hits this morning when I was driving in, and one of the thoughts is that President Trump feels comfortable going abroad. Think about his term. He went to visit North Korea and he went to Saudi Arabia. Everybody remembers the globe where he had his hands on the globe, right? So it's something that he's very comfortable with. And I think that President Trump will feel the urge to go abroad again. And generally speaking, and I'm not saying this is the general speaking, but generally speaking, presidents in their second terms become lame ducks fairly quick, meaning within the first 18 months. Once Congress starts thinking about the midterms and people start, actually campaigning, presidents tend to lose a lot of political capital. I'm not going to say that it's going to happen in this situation, but generally this is what happened with President Obama, and this has happened with President George W. Bush. And what do presidents do? Then they turn abroad, because that's when they start doing trade deals. That's when they start doing negotiations. That's when they look at legacy building. And so I certainly think that President Trump will go abroad. I certainly think President Trump will, will try and engage not only in Iran, but also Ukraine and potentially in the Middle East and China and so forth like that. It's just something that he's very comfortable with because it's a direct negotiation. So that's my high level way of saying that I certainly think that there's a lot of coverage that the BI Energy team is going to be doing over the next few months and years when it comes to Iran and U.S. policy.
Fantastic. Nathan, I think most of our customers on this call know how to find sort of the energy ecosystem type of research that we're publishing within the terminal, where to get it on BI. Can you just help folks? What's the best place to go to find the work that you and your team are doing there in Washington, D.C.?
Yeah, so we have a dashboard. It's BI Laws, LAWS. We have an election matrix there. So we actually break down, it's going to be called the policy matrix now that the election is over. But every policy that we are covering under the Trump presidency, for example, will have what I call as the 30-second view. It'll tell you what's at stake, what's important, the probability, and so forth like that. But as we get into 2025, if you want to get into the nitty-gritty of Washington, we host a call every Monday at 10 a.m. Rob comes on here quite a bit to talk about what's happening in Washington. We call it the Washington Policy Pulse. We can certainly add you to that, but it only lasts for about 10 minutes. We want to get you back to your day jobs, and for the most part, it's talking about the nitty-gritty stuff. So if you ever want to be a member of that, just please reach out to us, and we can certainly add you to that or our distribution lists.
I suppose you're accusing us of being much more verbose on the energy team, because we schedule these calls for 30 minutes and we always go over. We always have more to say than we have time to get to. So I think that's probably a good ending point. But we'll be back next Wednesday at 10 a.m. If this is a new call to you, Vince, Talon, Mike are all regulars. We also bring on our European team, our utilities team. We kind of have a broad discussion, and we try to make this stuff fun. We're thinking about all of these topics. We're trying to really break them down for you, do our best to write good research and really help to clarify what's going on in the world. So make sure to subscribe to our research, join these calls. participate in the community that we have. There's a chat room. If you're unaware, we have a very active energy chat that's with clients. Many of you are in it, but if you're not, you want to be in the energy chat, let us know. We can get you added, and we just look forward to being in touch. I hope that if you stayed up last night watching the election results, that you get some rest this evening. Hopefully the results were how you wanted, but if not, life goes on, I suppose. So anyway, it's great to have everyone joining, and we look forward to being in touch. So take care, everyone. We'll see you next Wednesday.
Thank you.
Bye, guys.